Have you ever noticed the price of your favorite gadget creeping up and wondered why? You might be seeing the hidden cost of tariffs. Tariffs are taxes on imported goods that governments add at the border to protect local industries. Though meant to shield domestic jobs, those costs are almost always passed on to consumers, raising prices for groceries, clothing, and cars. Imagine a smartphone assembled abroad for $500, then hit with a 20% tariff. Your phone jumps to $600 before retail markup. Beyond extra cost, tariffs generate government revenue but can spark trade wars when countries retaliate with their own taxes. In 2018, the US-China trade war slapped tariffs on $360 billion of goods, costing Americans an extra $70 billion that year. Trade wars escalate quickly, with each side imposing new levies in a tit-for-tat that drives inflation higher. Take steel and aluminum. When the US added 25% duties, automakers warned prices could rise between $2,500 and $4,500 per vehicle. Economic models show a 25% auto tariff can add about $6,400 to the price of a new car, equivalent to a $500–600 loss per household. At the same time, fruit and vegetable tariffs push up grocery bills, making healthy eating more expensive. Small businesses feel the squeeze too. Tariffs on imported components force them to raise prices or limit inventory, reducing choices for customers. If you shop global brands, electronics tariffs can tack hundreds of dollars onto your next laptop or TV. Economists warn lower-income households are hit hardest, since they spend a larger share of income on imports. Supporters argue targeted tariffs protect infant industries and save jobs, pointing to historic examples in manufacturing and technology. Critics counter that tariffs distort markets and slow growth, noting promised surges in domestic output often never materialize. In our interconnected world, a single tariff tweak can ripple through global supply chains overnight. Some experts suggest narrow tariffs in national security goods or rebate programs for households to offset costs. Meanwhile, companies explore reshoring production and diversifying suppliers to dodge tariff shocks. As a shopper, you can stay savvy, check made-in labels, choose local alternatives when possible, or time purchases during duty-free promotions. Tariffs are a powerful policy tool capable of funding government and shielding industries, but also driving up costs and fueling trade conflicts. Next time you scan a price tag, remember you're not just paying for production and shipping, you could be covering a hidden tariff tax. Could there be a smarter way to support local businesses without making everyday goods more expensive?